thanks for joining me for the Astranti Financial Training Industry Pack for the August 2017 Management Case Study exam. We're looking at Aurora today for our case company. Now, the purpose of this video and this pack is to give you the real-world industry context for the case study that you've been given for the exam. So I won't be going through the pre-scene. That happens in a separate set of videos. What I'll be doing here is giving you the industry context and relating it back. I'm not going to go through every single word. As you can see, the pack is about 100 pages long. What I'm going to do is pull out some of the key highlights and send you back to the pack itself to look at the details. The whole point of this pack is that you will, in the exam, will be asked to answer questions as though you are a management accountant working in the case company Aurora. The point of the exam is to test your employability in the real marketplace, and so that's why this type of exam is fielded. And so if you were working in a company like Aurora, you would have some industry knowledge, and you would understand the wider context. You would understand how your decisions fit in with the decisions of your competing companies and so on. Okay, so I'm going to kick off my highlights here in the modern era on page 10, and I will take it from there. So the first point I want to pick out about the modern era is that we're seeing increasing standardization, increasing platform sharing, computer-aided design, all of this to reduce costs and development time. So there's a lot of collaboration, there's a lot of standardization. So for example, if you are Toyota and you're making a saloon car, there's a good chance that you might use exactly the same gearbox as VW saloon car, which are all made by the same people. They're made to standards. Okay, so there's a lot of standardization, and what's inside the car is often more or less the same as what's inside another car. Over the page, I want to pick out the point about the economic crisis of 2008, sometimes called the 2008 recession. The economic crisis and the ensuing recessions around that time cut almost a third of light vehicle sales from these massive companies, Chrysler, Toyota, Ford and Nissan. Okay, so there was an enormous dip where very large influential motor companies did incredibly badly. The key point there is that when you go into a recession, there are some things that consumers still have to buy, like shampoo, soap, food. We call these recession-proof industries, but cars, on the other hand, are not recession-proof. So the economic factors in Westland and the other markets where Aurora trades are going to be influencing strategic decisions. The next point I want to make is about the entry of China as the world's leading car manufacturer, or world's largest. Okay, so they are greater than Japan, the US and all of Europe. So that is obviously going to play into the general industry balance of power, isn't it? We've got enormous competition from a country where labour costs traditionally have been much lower than in Japan or in the West. It would mean that Aurora would probably face competition from Chinese brands, but also there are opportunities for Aurora to outsource, to offshore production processes in China as well. It's developed this manufacturing competence, and so therefore Western manufacturers could actually benefit from that to reduce costs. So when we whiz down and have a look at the application to the pre-scene, the key point to make here is that Aurora has been around almost since the inception of the car industry itself. They have certainly been trading for the most important part of the life of the auto industry, which means they will have experienced most of the technological and industrial changes outlined in the history, which you can read in the pack. The point of mentioning it is that this is a company that has weathered all kinds of change, and so therefore by inference ought to be able to weather all kinds of other change. The company clearly knows how to adapt to changes in technology, to market changes, to economic changes. All right, it's a survivor. Okay, when it comes to the industry life cycle, the auto industry, which has been around for 200 years, is clearly in the maturity stage. And what we're seeing in Western markets is a plateau situation. No sign of decline, but growth is very, very slow. To give you an idea of this, from Peugeot's most recent financial report we have in 2017, the group anticipates a stable automotive market in Europe, Latin America and Russia, and growth of 5% in China. Now, in lots of other industries, you would see much faster growth in China, and therefore this is an industry that really has reached its peak. If we're only getting the low single digits in China, then really we can't be seeing much above 1 or 2% in the West. It may even be less. What we know in general about mature markets, without even having to go to find the figures, is that we're going to have slow, minimal, but stable growth in the low single figures. We're going to see high consolidation, okay, which means we've got an oligopoly situation where there are few large players competing with products that are very difficult to differentiate, okay, and that means we're going to have minimal profits. So when you've got an oligopolistic market like this, what your competitor does absolutely affects what you are going to have to do. It's not really possible to have a company like Toyota move into electric cars, for example, and a company like Hyundai just completely ignore it. There's no way that they could do that. They would have to follow. And so this is the market that we have here for Aurora. Okay, so if I move on a little bit, I'm going to whiz through the products here and the competitors, and I'm going to focus on this section about electric cars. So in the auto industry, electric cars is big news now. Since 2008, we've had a renaissance in electric vehicle manufacturing, and driving that renaissance, that rebirth, is advances in battery technology, which means the batteries are better, they last for longer, and it means that an electric car becomes more viable. They can do longer journeys. Also driving the growth have been concerns about increasing oil prices, the fact that we're going to run out of oil at some point quite soon, and the need to reduce greenhouse gas emissions. Okay, so we've got environmental concerns, we've got concerns about the sustainability in business terms of the industry itself. How do we continue driving cars if we're running out of oil? And lastly, the technological advances that have made it possible. In earlier times, we had a go, didn't we, as a society, of driving electric cars. They weren't really very good. They didn't go very far. We've come on significantly in what we're able to achieve now, okay? And so we're at a stage where we've got national and local governments establishing tax incentives, subsidies, and all kinds of other incentives to promote the adoption into the mass market, okay? Not just for the wealthy elite, but into the mass market of electric vehicles, okay, that are going to be wholly electrically powered. Now, according to some recent research, we're seeing a big fall in the price of batteries, which is great. If you want to buy an electric car, they're getting much, much cheaper. Not so great if you make batteries, I suppose. But the important point here is that it's becoming increasingly viable for consumers to get an electric car. So a few key points. The way you've got a situation where market forces and powerful stakeholders like governments are the automated cars that are allowed on the road converging are not yet fully automated. Then it's not fully autonomous. They all still
we
would
require
expect to see
a human driver
Aurora
at the wheel,
who is ready and therefore qualified to take control.
We would expect
of the
to see
vehicle
Aurora
at any
fully
time.
engaged.
So they're not yet a solution to
have
the,
an
electric car.
my driver's license. I don't know how to drive.
To see them
I'll just get a driverless car
consistently in developing better.
But you can't help but feel it's on its way.
The next important point about driverless cars is what they are made of,
very
in terms of bits and
engaged
parts. Okay,
in the driverless
where
car
traditional cars
phenomenon
are about motors and engines and physics, where traditional driven cars are about motors and engines and engineering, autonomous cars take motors and engines and engineering as a base, but they're really all about electronics. And so while it might have been possible in the past for an automotive manufacturer to rely on fantastic quality engineering, it's no longer possible for them to ignore advances in electronics. So it does mean huge investments in research and development. Now, the move towards autonomous cars, driverless cars, or automatic cars, depending on how you want to Now, the move towards driverless cars is slightly different to the move towards electric cars, although they may converge at one point. But electric cars is a technology that's been in the works for so many years. We've had the technology, we just got better at it, if you like. Driverless cars is a disruptive technology, and it's coming from outside the auto industry. I'm not sure if you can see the logo on that car, but it says Google. The key players in driverless car technology are not car manufacturers, but tech companies. And so looming over the auto industry is a possible situation where you have the traditional car manufacturers suddenly usurped by technological companies, and also almost become the kind of blue-collar manufacturing
research and development
for the technology
is
companies.
a big area
danger
of investment
for the global car industry. Okay, so the key point here
in the music industry
is that car manufacturers are spending more and more every year on research with iTunes because they need to try and stay ahead now, in a sense,
rapidly shifting
record labels that
fierce
used to be
competition
huge
from the technology
power
industry,
brokers
which we have
are
just
now kind of
looked at,
content
okay?
providers for Apple.
So
we're seeing spending on
something
research
similar
research
could be
and development
happening in the car
increasing
industry
at an annual
around the
rate of
corner.
about 8% over the
There's
last
still
4
everything
years.
to
So
play
we'd
for,
obviously expect to see
and so
something
Aurora
similar
definitely
to
needs
that
to
at
get on
Aurora
board.
on this
So you
trend.
probably
Want to be checking that Aurora's spending on R&D matches that industry average, more or less. Okay, so if we relate this back to our pre-scene, what we can pull out is that when it comes to types of car, we know we don't know how many types of cars Aurora makes, but we are given some information. We're given costings for a saloon and a compact. We also know that the company produces SUVs and sports cars, okay, as those are referenced in the pre-scene. Later we learn that it makes a hybrid car, and we also learn that it makes an electric car. But it doesn't mention a driverless car, and from the industry information we now have, the context we now have, we know already that it must make a play in driverless cars. So I wouldn't be surprised if in the exam you get something that says, okay, well, we're looking at making a play in driverless cars. What is your opinion on this type of investment or this type of supplier or whatever? It's likely to come up. It could come up in all kinds of different contexts, but I think there'll be some mention of it. When it comes to competition, it's relatively easy for us to identify some direct competitors in the car market, given that they're high quality and offering good value for money, and they're based in Europe. We can find other mid-market manufacturers in Europe, such as Renault, VW and Fiat, okay? But given what we now know about driverless, we know that they're also competing with Google and Apple, so they mustn't take their eye off that ball. Okay, so when I come down to some of the conclusions that I make, overall, Aurora has a history of being a company that absolutely stays ahead of trends. Okay, so we would want it to we would want it to have a significant play in driverless. Without such a play, it risks getting left behind. So the question is going to be, does it have the necessary funds to make those investments? Is it making those investments? Does it have the funds to make those investments? And if not, where will they come from? So you can see now how driverless technology could actually be the source of a question about finance. And given the context that we've looked at, it doesn't really seem viable for Aurora to say, actually, you know what, we'll pass on that one. Okay. Now, just before I go, let me remind you that this is not the end of it. We do offer a full range of support materials, including the study text and other course videos. We do the industry analysis, where we look at the real world industry that your case study is based on. We do mock exams around the case study exam, and we offer marking, feedback and masterclasses, all of which are covered by the Astranti Pass guarantee. So I'll see you in the next video.